So without further ado, I'm going to hand over now to Nigel to start the webinar.
Thanks, Dave, and good morning, everyone, and thank you for joining us today on our Net Zero Demystified webinar. I'm Nigel Evans, and I work for Control Energy Costs, but today we're also going to be asking, so it's quite interactive, questions to yourselves. So if you could take a scan with your camera on your phone of the QR code here as we go through the presentation. So if you keep your phone available, there will be questions that we're asking throughout, and you'll be able to populate those questions, which is anonymous as well, but it will give us feedback in relation to the presentation that we presented today. So if you could take a scan of that QR code, that'd be great. And when we ask the questions as well, if you've fallen out of a Slido for whatever reason, the QR code will be on the left-hand side of the question as well. So, as I say, I'm Nigel Evans. I work for Control Energy Costs. I've been in the energy industry now for over 20 years. So a lot of what we're talking about, although people were aware of it, it wasn't really discussed and mentioned to the extent as it is today. So I work with associations like AILU, local chambers of commerce, organisations and businesses like yourself in relation to helping you understand energy management, your energy strategies, and helping you toward your net zero journey. So passionate about energy reduction and climate change, and anything I do to help you or a business helps the climate. So I really enjoy my job in relation to that. And then I'm working in partnership with Dave from Auditel, who's one of our partners. So over to you, Dave, to introduce yourself.
Thank you, Nigel. Good morning, everyone. Yeah, my name is David James from Auditel. We're working closely with Control Energy Costs on decarbonisation for their clients. I've been in manufacturing for over 25 years. All of that time has been involved with sustainability, timber and plastics in particular. We work at Auditel, we work to help businesses decarbonise to internationally recognised standards as BSI and NQA consultants.
Thanks, Dave. So I've got an introduction to greenhouse gases and what is net zero is key. So there are 7 greenhouse gases which impact climate change, and you can see here the 7 gases. But all I want to draw your attention to is the multipliers at the bottom. So hydrofluorocarbons, for instance, so for every tonne of hydrofluorocarbon released into the atmosphere, it equates to 11,500 tonnes of carbon. So hydrofluorocarbons, basically UPVC windows, for instance. And then we've also got to the right of that, sulfur hexafluoride. If you look at that, for every tonne of that released into the atmosphere, it equates to 23,500 tonnes of carbon. So it's important to understand processes and any of your processes that may release any of those gases into the atmosphere, or your clients' emissions as well, which is important to understand that. So what is net zero? Net zero refers to a state in which the greenhouse gases going into the atmosphere are balanced by the removal of them from the atmosphere. So that's why net zero is key, especially when it comes to CO2, at least, and the word net zero. So you'll come across quite a bit of terminology. So carbon neutral, that's whereby you can actually offset what your emissions are. And we'll go through how you can do that throughout the presentation. But people have heard of what carbon neutral is. It's basically offsetting your emissions. But you need to understand what your emissions are to be able to offset. So we're looking at probably a mix of the ways that you can do things in relation to reducing your carbon footprint and offsetting. Then we have net zero as well, which is obviously a longer term. So basically, as I mentioned earlier, it's removing the residual from the atmosphere and making it net zero. And then we also have zero carbon, which at the present time we're working towards, but you can't do that. And what's your thoughts on that, Dave?
Yeah, zero carbon, we're relying, it's very innovative at the moment, the technology in this area for carbon capture. And we're relying on the carbon capture technology to evolve to help us hit zero carbon, because as you rightly say, Nigel, at the moment, it's not yet possible.
So, understanding scopes 1, 2, and 3. So, scope 1 are the emissions that you emit in the processes of your business on a daily basis. So, you can easily control those emissions through identifying the hot spots where you're using energy, how you're using energy, and where you're using it. And you can put control mechanisms in place to actually reduce your scope 1 emissions. So, quite easily to control. Scope 2 are the emissions which are generated through the energy that you're purchasing, so power, gas, etc. And once again, you can actually reduce the emissions by how you're purchasing that energy and the type of energy that you're purchasing as well. So you've got great control over that. But we come on to scope 3, which is hard for a lot of businesses, including large I&C, let alone the SME sector. So this is the supply chain, both upstream and downstream. So you can imagine if you've got a large client or even in your own supply chain, it's a nightmare for a lot of people to understand what their scope 3 emissions are. And this is where a lot of people struggle, is with the scope 3 emissions, identifying what they are and doing something about that within their supply chain. And it's estimated that the SME sector makes up 50% of the UK's emissions, and that 76% of SME still haven't started the decarbonisation journey. So if we have a look at the climate action, it's just one of 17 UN Sustainable Development Goals. And then if you look around the others, so basically action 7, 8, 9, 11 and 12 all relate around energy and the workplace and sustainability in what you're doing. And a lot of people now, especially employees, are looking at how sustainable businesses are in relation to who they want to work with. So it's important to understand all these touch points in relation to sustainability. So our first question of the day, and as I mentioned earlier on, if you haven't got the QR code already, the QR code is there on the left-hand side. So why have you attended today's webinar? And I'll give you a little bit of time to obviously respond to that. So just still waiting for a few more to answer. And as I said, if you just scan the QR code, and all the answers as well are anonymous, so it's just to give us an understanding of your attendance today. Okay, so we've got 12 people that have answered that question. So mainly here for is knowledge and guidance and obviously support. So that's what today's webinar is all about. It's providing the knowledge and guidance, and obviously we're here to support you in what you're looking to achieve. So someone's asked the question already, but have you started your net zero journey? Wait a little while, just for a few more to answer. Okay, so that's great. So as you can see, we've got a mix of people that have started the net zero journey. Be interested to see where you are with that journey, and obviously those that are still looking to understand how they can go about starting the net zero journey. So, do you see net zero as a cost to your business or as a benefit to your business? Excellent. Okay. Still got a few more to answer that question, but as you can see, it's quite good to see that the vast majority of the people see it as a benefit to the business, and obviously there is a cost associated to it, but we can also go through what the cost may be compared to the benefit of being on a zero journey. So now what I'd like to do is hand you over to Dave, who's going to go through the standards and data collection in relation to starting your net zero journey. Over to you, Dave.
Thanks, Nigel. Yeah, I just wanted to touch on standards to start with. We've been working with BSI now since 2020, and the standard at that time was the PAS 2060. You can see there on the left-hand side if you're looking at carbon neutrality. It was always meant to be and would always evolve into an ISO standard, which it now has as of the end of 2023. So we're currently in the transition period of 2 years, moving anywhere that was on the journey to PAS 2060 over to the ISO standard. If you don't want to offset for carbon neutrality, you can go for ISO 14064. And if you do want to offset the carbon emissions to become carbon neutral, then you can go to ISO 14068. Whether you choose to take a standard or not, the methodology used is always the same, and it's always built on the GHG protocol. So whether you choose to go for a UCAS accredited standard or not, the methodology used is robust and always the same. So these are the 5 principles of carbon accounting. We start with relevance. This is the, again, this is working to the GHG protocol methodology. So some people say, you know, we talk to people and they say, well, scope 1 and 2, we'll do that and leave scope 3, or we'll do a little bit of scope 3. But in reality, it doesn't work like that. The business decides the boundaries that are set and the emissions that are calculated. So when we move down to completeness, when we talk about the boundaries being set, once we look at the business, we'll do a value chain map, as we call it, where then that sets the boundary around the business, and that dictates for completeness which emissions need to be calculated. Then we move down to consistency. The use of the methodology, as I said, is the GHG protocol, and that gives you accurate and meaningful comparisons. Transparency is absolutely critical. Whether the data is good or bad data is absolutely critical, which we'll touch on in a moment. But good or bad, transparency is absolutely critical. If the data is bad, don't hide it. Just be transparent. That's part of the journey. And then accuracy. Again, with the methodology being used, it's very, very important to get the data absolutely accurate. There are good reasons why, which can be financial, which again, we'll touch on in a few minutes. So I mentioned data. It's all about the data. It's very important to have accurate data. This is one of the documents you would see as the starting of the process. So once we've agreed the boundaries in scope 1, 2, and 3, we would issue a data requirement report. We'd get back, we'd look at the data, analyze it, and then come up with a traffic light system to say what data can be used, it's absolutely fine, and what data needs to be improved on. This is what a carbon footprint report looks like. It's quite surprising. There's an awful lot of people still haven't seen one yet. So that's the front cover over on the left, and just to the side of that is a summary of the work we're doing. So that could be used for senior leadership teams, boards, investors, or indeed social media. If you just want to, a lot of people want to shout about what the good work they're doing. There is a cost to it. There's a huge benefit to it too. So it's good to tell all your customers and your suppliers what you're doing. And then to the right of that, you can see an example there of all the detail that goes in and sits behind in the actual report itself. So I mentioned earlier a value chain map. That is the business on paper. That would then produce this, which is the emissions map. So that shows all the fuels, the gases, everything coming into the business. This is all based on the operational carbon footprint, as we call it, which is the day-to-day running of the business. So this is the carbon footprint report. That's the emissions map. And over on the right there, you can see that in this instance, the carbon footprint of this business is 143.20 tons. This is we call this our maturity model of how we expect to move forward over the next 5 years. Most of us at the moment are in the beginner stage, number 1 there. We're getting used to working with each other. We're looking at the data. We're analysing the data. We're getting the data into a workable fashion. We have clients who are moving in, who are already emerging in year 2. The data is now good. We're working with good sets of data. It becomes more accurate. It becomes business as usual, and the board expect to see our reports on their desk annually. Then we get to establish year 3. Again, we are in this period as well at the moment. Operational carbon footprints become business as usual. At this point, we fully expect to be working with your supply chain. Your suppliers will be on board. You'll probably be making commercial decisions on some of your suppliers based on where they are at now on their carbon journey. And then a lot of clients will stay there. As once you become established, you've got somebody on the board who knows exactly what's going on with your carbon. Your suppliers are on board, and you've got all the documentation you need to support your suppliers and your clients. However, you can move that forward and become leaders in your industry. We have a couple of companies who we're working with who want to be in that space. They want to be the champions of carbon in their market sectors. So when we talk about data improvement planning, this is kind of what it looks like. You'll hear the term spend analysis that we can't work to. It's inaccurate data. It's not solid enough, and it's impossible to influence. Estimated data is just above that. If there's data missing, then we have to estimate it. The downside of estimating data is it's always looked at as worst case scenario. So it'll increase your carbon footprint if we're working with estimated data. We always try to be in, as you can see there, 2 and 3 with high quality and acceptable data to produce a fully and accurate carbon footprint report. A quick example for you what that means. So in this instance, this is your transportations. This is downstream transport. There's a parcel there leaving your building of a ton. It's going 168 miles. We know that. We've got all the documentation to demonstrate it. We know what vehicle it's gone on. It's a diesel vehicle. So we've got an accurate calculation there of 336 tons per kilometre, which gives you a 0.040 carbon footprint impact for that parcel. And then just below it, we've now got inaccurate data. So we're not sure how heavy the parcel is. We know where it's gone, don't really know what vehicle it's gone onto. Therefore, we can't accurately calculate because we haven't got the conversion factors to do it. So we have to use average conversion factors. And that comes out, as you can see, significantly higher there at 0.15, which is a 375% increase on the actual figure using actual data, which in effect take your carbon footprint on your downstream transport from 40 tons to 150. There is talk at the moment of balance sheet tax coming in. It's already happened in Denmark. It's on its way to the UK. And if you're being taxed per ton of your carbon footprint, there's 110 tons of carbon tax there payable because the data isn't accurate. So it's absolutely critical to get accurate data. It's a little example of a year 1 footprint. So the data, 65% is absolutely fine. We can use it. 15% is usable, but it could be better. 18% is unusable. So we'll work on that together as part of the journey to get accurate data. In and around there usually sits expenses, business travel, that kind of thing, because there's no standard reporting mechanism. And then only 2% in this case, data was unavailable, so we would have to use estimates. That's fairly typical of a year 1 carbon report, and that's where we start to move all those numbers up to usable and good going forward. So looking at this example in their market sector, we do get asked a lot, how do we compare against other sectors? So we've taken a sample here of 73 carbon footprints across 6 market sectors. We'll pick on there in particular manufacturing. It's always quite a high one because of the energy being used. So that gives you across the manufacturing sector for us at the moment. This is an ongoing data set that we keep updating. But if you want to know kind of where you sit within your sector, we can give you, this is not a benchmark, it's more of a yardstick just to understand where you are.
Thanks, Dave. Really appreciate that. So just going to present a video in relation to the things that you can do as a recap around what net zero is and the scopes and some of the things that you can do to reduce your energy consumption and emissions.
Hello, I'm Phil Ager, Managing Director at Control Energy Costs. I'm here today to talk about net zero, a term we hear more and more frequently in the news. But what does it actually mean? First of all, I want to explain how we measure carbon emissions. These are generally measured using a standard called the Greenhouse Gas Protocol and can be summarised into 3 scopes. Scope 1 emissions are those that are released into the atmosphere as a direct result of an activity, such as gas for heating an office or fuel for operating a vehicle. These are often referred to as direct emissions. Scope 2 relates to the emissions created from producing energy that your company uses. In other words, the energy that your business purchases. For most organisations, this is where they account for their electricity usage, and this can be made net zero if you are purchasing 100% renewable energy. Scope 3 covers a much wider remit and includes all your indirect emissions. It is generally the largest part of an organisation's carbon footprint. These might include transportation and distribution, waste generated, leased assets, business travel, employee commuting, purchased goods and services through your supply chain, and also water consumption. Net zero covers these 3 scopes, and the journey to net zero is made up of 4 steps. Number 1, review. Identify your carbon footprint and first steps to net zero. Number 2, reduce. Identify and implement opportunities to reduce your energy use. Number 3, renew. Generate electricity with renewables and transition to use cleaner technology, vehicles and solutions. Number 4, rebalance. Rebalance your emissions with carbon offsetting. The UK has an ambitious target to be net zero by 2050, so we all need to start planning for this now and acting sooner rather than later. We need to do all we can to keep global warming to less than 1.5 degrees Celsius. As a business, there are things you can do to reach net zero and support the planet. You can move to electric vehicles, adopt energy saving technology, set up 100% renewable energy contracts, consider on-site renewable generation, and you can offset your carbon emissions. If you would like to find out more about how we can help you on your journey to net zero, why not get in touch?
Okay, after that video, just thought it'd be worthwhile explaining some of the services which we provide that will support you throughout your net journey. Starting with obviously review, you need to be able to understand where you're using energy, how you're using it, and what you can do about reducing that energy. So in relation to monitoring systems, we can provide you monitoring systems, sub-metering, we can install site works as well to help you identify where you're using that energy at that particular time and what you can do about it. Reducing what you're using within the business and throughout your supply chain. We can also provide fixed and flexible energy procurement. We can provide green energy in relation to that. So once again, your scope 2 emissions can be reduced very, very quickly if you're purchasing green energy. So that's beneficial to you as well. And site works, if you're looking to reduce your consumption and you're installing a piece of equipment that's more energy efficient, we can actually provide the cabling, the generators for that while you're doing a pre-install, and if you need to, a substation as well, so that we can provide support in relation to installing energy efficient equipment. We can provide carbon solutions, renewable and feasibility studies. So all the renewable energy generation, so your on-site generation, we can provide feasibility and full project management to all generation platforms, be it anaerobic digestion, waste to energy, wind turbines, solar PV, solar thermal, air source heat pumps and ground source heat pumps. We can support you in anything you're looking to do to make your business more energy efficient. And when it comes to billing and analytics of your invoices, we can support you in relation to that as well. So should you be CCL exempt and you're being charged a climate charge levy, we can actually go back up to a period of 6 years and recover those costs on your behalf and ensure that your supplier is charging the right levies in relation to that. So just a few more questions in relation to your net zero journey. Just trying to understand what support you like, and this is a multiple choice question in relation to your net zero. A little bit longer in relation to that as well. As I mentioned before, if you have fallen off the Slido, then there's the QR code on the left-hand side there in relation to that as well. Okay, so we've got a few more just waiting to respond. Okay, so I'll take a look at what we're doing. So everyone likes support and knowledge in relation to that and the resource, because obviously a lot of people in relation to businesses, they're probably looking at multiple tasks and don't really have the time to commit to this. And that's where ourselves and Auditel can support you in relation to that, and obviously give you an idea of what the cost will be and provide you more information after we present it today. So more than happy for you to reach out to us in relation to support and starting your net zero journey. And I'll be back to you, Dave. Many thanks.
Thanks very much, Nigel and Dave, for your presentation. We now have as much time as we need, up to half an hour, for questions and answers. So don't forget that you can type in your questions and answers using the Q&A button at the bottom of your screen, and then we will take those questions and answer them. To kick off, I have a question for you. We've had a recent change of government in the UK, and they've indicated that and have already set up an organisation called Great British Energy, which I assume is relevant to net zero. Perhaps you could maybe give us a little bit of an insight into that.
If you want to go first, Dave, and then I'll come in as well.
Yeah, sure. Yeah, Great British Energy is more going to be about managing assets than supplying energy. But more importantly, I think for businesses, I mentioned earlier, I touched on it, is the government are bringing in carbon taxation. So the corporation tax is being looked at Westminster at the moment. It's already started in Denmark, for instance. So we know the numbers they're working to in Denmark, and that is going to be going forward. As part of your annual accounts, you will need to put your carbon impact on your balance sheet.
And in relation, sorry, Dave, in relation to Great British Energy as well, as you mentioned, it's not actually an energy supplier. It is a basic asset management, so they can provide funding and then the asset management of the renewables. So it's very, very predominantly renewable energy, and they're reducing the application time it takes for renewables. They've opened up onshore energy, be it onshore wind turbines again, and the application time in relation to that. So the net zero journey is going to be key to this. And on the note of that, last week, the last coal-fired plants generation closed down. So we're now moving towards renewable energy and cleaner energy. So the last coal-fired plant closed down last week. So we are moving towards that.
Okay, thanks very much. Another question about the target of 1.5 degrees above the average global warming. and whether I read somewhere or saw somewhere on the news that we're kind of on target to hit 2 degrees. So is that goal still realistic? What's the sort of status on that target?
You're quite right, Dave, that yeah, we're not on target for 1.5. We are close to 2 at the moment, but we talked earlier about zero carbon, which revolves in carbon capture, and that's going to be sinking carbon is going to be absolutely critical to get back in line with those targets. We should have started 2 decades ago. We all know the reasons why. With the energy sector wasn't really on board with it, and we didn't have governments around the world all collectively agreeing either. But now we are a bit behind the curve. We're not on for 1.5 at the moment. We're looking at 2. But when we get the carbon capture technology, hopefully that will accelerate us back towards 1.5.
Yeah, absolutely. And of all the large organisations that have started the net zero journey and have stated that they're starting a net zero journey, the vast majority of them, probably 75%, have already said that they're not on target to achieve that. And the main area they're struggling at is scope 3, the supply chain. And a lot of the people that are on board in today's webinar and the SME sector are part of that supply chain. And if you think about that, 50% of the SME market accounts for the emissions, and that 76% of them haven't started that decarbonisation journey. The quicker that we can start that journey, the better towards net zero and achieving the target that's been set for 2050. But it also enables the SME sector to become competitive, because what's going to happen, these large corporates are going to be asking, excuse me, Mr. Supplier, what are you doing to help our carbon footprint reduce? And they're going to move to suppliers that are doing something about it if you're not. So it's going to give you a competitive advantage if you are starting that net zero journey already.
It's an interesting one there, Nigel, actually you touch on. We're seeing that already with transport. When we're looking at downstream, going through the supply chain, looking at downstream transport, the big area of change at the moment, for instance, if you look at Parcel Force, they've got a very old fleet of vehicles, all fossil fuel, very slow to change. DPD have all got all electric vehicles. Up until last year, they were claiming carbon neutrality by offsetting. They've stopped doing that now. They're using the money, instead of buying offsets, to invest in much higher tech and faster and bigger fleets, because they're growing as a business, because they're taking business away from Parcel Force, because companies are doing that to reduce their own carbon impact by removing their delivery vehicles from fossil fuel to electric. So that is already happening in the supply chain now. You will lose out if you haven't got your plans in place.
Yeah, and the other thing to that as well is that if you're in the defence sector or working with some large organisations, they're also preventing you from tendering for any business if you haven't got a sustainability strategy in place. And I also know some banks are not providing commercial mortgages if you haven't got a sustainability strategy in place, and are asking us to provide that for businesses that don't have them in place. So it is moving forward.
And the asset registers have changed as well now. You mentioned there with the banks. We know that Lloyds Bank they used to have just their asset register, and now they've got their green and brown assets. And any assets which have not got an up-to-date EPC rating, they're a bit concerned about, which are on their brown asset list. And we're working on the green technology to upgrade those buildings to put them back onto the green asset register, because they're concerned about the value of those properties compared to where they used to be.
Mm-hmm.
I have a question related to electric vehicles. So, if you use electric cars, for example, or electric transport, you mentioned, I think, that commuting to work, employees, etc., is all part of the scope in the future. If you buy your electricity from a green supplier who uses 100% renewable energy, and you charge an electric car at work, is that effectively like zero carbon solution?
Yeah, in effect, I don't know if you want to add to that, Dave, but there is a technology now where you can actually, electric cars will provide energy back to the home or the business as well. I think there's only about 5 brands that are doing that. So basically you can reverse charge. So you can almost network the battery supply and provide it back to a business or a house, depending on who you are. But obviously, if you've got an EV charging points, we can provide EV charging points for businesses and for lorries and buses, not just cars. Because obviously a lot of people are looking at distribution networks as well. I don't know if you want to add to that as well, Dave.
Well, when we talk about behavioural change, that's exactly what we mean. You know, companies are involved in part of the journey is to get your staff to buy into what you're trying to do as a business. So there's incentives like putting free charging points at the office so you can charge your vehicle. Obviously, we know that the benefit in kind from a company vehicle that's electric compared to fossil fuel is there's a huge difference with the two. Some companies are offering staff incentives to go and buy electric vehicles and move away from the fossil fuel cars. So that's all part of the journey that we're all on together, and companies are offering, and supporting and educating their staff to get on board with it and do their own things themselves as well. But even car sharing at the moment, if not everyone's in a position to buy an electric car, not everyone wants one, to be honest, but then you look at car sharing schemes. That's not all jump in a car and have one person driving to work. Let's, do a couple of pickups and have 4 people in one car. There's things we can do, and just you don't have to put yourself out much to make a difference.
And HMRC provide an increased mileage rate as well if you're car sharing. So there's a benefit to that as well.
Okay, question from the audience from John Edwards. Are charities or small businesses being treated in a different way to other companies?
In relation to VAT and levies, there is a benefit to being a charity, but as far as the rest goes, it's like any other business. It's how you reduce your consumption, which reduces the emissions. And I suppose the only way of summarising it is that the cheapest form of energy is the energy you don't use in relation to cost and emission.
In terms of company size, though, I think you mentioned that the larger companies are being perhaps targeted first to be forced to comply with some of the legislation that's coming in.
Yeah,
so the SMEs will be lagging a little bit behind there, but they will catch up.
Yeah, exactly, and I think that sort of goes back to what we've mentioned earlier on today. Some of them have to go through regulation and compliance already, so the larger companies are having to look at the energy savings opportunity scheme, which identifies hotspots throughout the business and the opportunities that it states to reduce those large using parts of bit distribution, be it some form of machinery. So basically it identifies what you can do to reduce your consumption. Then that's every 4 years. And then you've got the streamlined energy carbon reporting, which is every year. But once again, these are for all larger businesses. But there are some SMEs that are doing this voluntary. And what we're saying here today for the net zero journey is start your net zero journey now. Don't wait until a large client turns around and says, what are you doing? Because that's going to give you competitive advantage. And I don't know if you want to add to anything to that, Dave.
Yeah, thanks, Nigel. Yeah, I would say there's for the larger companies, if you're looking at government contracts in the public sector, there's a notice, it's called the PPN 0621, which is a public procurement notice. And that dictates at the moment that any contract that's a public sector contract that's worth over 5 million, you have to have a carbon plan and a carbon reduction plan. However, that 5 million is reducing all of the time. Actually, in Wales, they've got rid of it completely. So if you want to apply now for any public sector contract in Wales, you need to have a carbon plan, and I believe the same is going to be done in Westminster, although not quite so dramatically in England. It will reduce rather than just be completely taken away. But yeah, as everything keeps moving forward, this will come down. The supply chain to smaller companies, and we all know everybody is in somebody's supply chain somewhere, so it's going to impact everybody at some stage. But be interested the same. I don't know if that was alluding to grants and that sort of stuff, and no is the answer. There's no real grants available these days. I think that the cost of solar, for instance, is 1/10 of what it was 20 years ago. So it's a real good return on investment. Going back to the question you asked earlier, Nigel, about see a benefit or a cost, there is an upfront cost, but the return on that cost is really quite quick now, and then it becomes a very quick commercial benefit going forward.
Yeah.
Okay. So that's all of the, oh, there's one more question just popped up. Okay, so just keep firing away with the questions. If you think of something, just type it up and we'll get onto it straight away. So this is from Jean Taylor. Will small businesses go out of business because they don't have the resources to invest in carbon zero? Electricians, builders can't afford to buy electric vehicles, etc.
I don't think they will. It's going to get to that level where they'll go out of business, because the support, like the companies like ourselves and Auditel, are here to support the small business and the organisations like AILU to actually advise on what they can do. So the support is there, and what you can do, we're more than happy to see what you can do. It's just having that knowledge of the smaller things, because we're all doing things at home. It's bringing that to the business as well. So if you're doing something at home, look at what you're doing in the business, and you can move what you're doing in the business to home. And the whole point of this is that it's not just what we're doing at work; it's what we're doing personally as well, and socially, to help reduce that footprint. So more than happy, to provide advice. I don't think it'll come to that.
I think as well, on the subject of electric vehicles, that might be a nice to have for some people or most people, but for some people it's just not a possible solution. If you live in an apartment block or flats or something, you've got no means of charging at home. You might have no means of charging at work, so you've got to go to a charging point and pay over the odds per unit to charge. So
yeah,
but I guess you can reach carbon zero without having an electric vehicle.
Yeah, exactly. Because you've got to look at a mix. It's like at the moment, the energy mix. It's a mix of all generation platforms. You've still got nuclear, which is your long base load, and then you've got renewables. The wind doesn't always blow, the sun doesn't always shine. And as I mentioned earlier on, we're reducing our reliance on fossil fuels, and the last coal generation station closed down last week. So we're now predominantly moving towards wind, solar, renewable energy, and we need to update the grid. We need to move forward with that. So I think the support there for renewables and Great British Energy is going to benefit the SME and the large INCs moving forward.
And of course, the terminology in that question was carbon zero. And we mentioned earlier on that without the technology isn't there at the moment yet to support carbon zero. So we've got to be careful the language we use. But this is not about making people go out of business. Yes, okay, some companies might not grow as quickly as others through winning contracts that require carbon planning. But it's not intended to put people out of business. This is just doing the best we can. We've all got to earn a living. Some of the industries we work in, they produce single-use plastic. That is their living. If they stop producing single-use plastic, as much as we'd like to get rid of it, they're going to go out of business. So you can't change everything overnight. Water bottles, the amount of single-use plastic water bottles in existence is absolutely frightening. We know as a product that less than 10% of plastic that has ever been produced has been recycled. The rest of it still exists somewhere, usually in landfill. So this is a journey. It's not intended to put people out of business. It's a change. We'd all just want to do the best we can and move forward.
Yeah, every little bit helps, I think, towards the goal.
Thanks very much. There's no questions unanswered at the moment. So last chance, last call for questions. If you have a question you'd like to ask, then by all means type it up. Otherwise, I'm sure that Nigel and Dave will be available by email if you want to watch back the webinar and pick up their email addresses. From that, you will be able to reach out to them individually.
Absolutely.
Okay, no questions have come up, so I'm not going to make people hang on, but I'd just like to say thank you very much to Nigel and Dave. Thank you to all the people who've attended live. There's probably another 30 odd people who have registered and haven't attended that will watch the catch-up video. Give us a little bit of time and we will process the video of the webinar and we'll get it up on YouTube and Vimeo, and we will send everyone who's registered a link to watch it. And as well as that, we like to, this is the fourth of these webinars that we've done this year, and we do like to always continuously improve our quality. So we will be sending out a very short survey on SurveyMonkey to everyone who's attended the webinar, just to ask you for your feedback on what you thought about it. And also, if there are topics that you think that you'd like us to cover that we haven't covered yet, then by all means get in touch, and we will seek to deliver more of these webinars. We're looking to do about 6 next year, and so we're waiting to hear what topics people would find most interesting. So at that point, I'm going to say thank you very much to everyone, and I'm going to end the webinar now, and I'll just give Nigel and Dave a chance to say goodbye.
Yeah, I just want to say thanks to everyone for attending today. Really appreciate it. Thanks to Dave for the opportunity, and thanks to the other Dave for supporting us today. But we are here, as I said, no questions silly. We're here to support you, and I'm going to be at the next get together later this year, so presenting at that as well. So if you want to grab me, then you can. But in the meantime, please reach out, and more than happy to help work out. Thank you.
Yeah. And yeah, thanks from me. Thanks to Nigel for inviting us to help out with this webinar. Thanks to everyone for attending. And if anyone needs any questions answered or any help, we're here to support.
Okay, thanks very much, and goodbye.
Thank you very much. Bye.